We are joined right now by U.S. Treasury Secretary Steven Mnuchin. He joins us from the Select USA Investment Summit, which is taking place just outside of Washington, D.C. And Mr. Secretary, thank you for your time this morning.
Good morning. It's great to be here with you.
It's great to see you. I want to start in sort of a roundabout way. I know we're going to talk about tax reform and all of those issues that are there, but if you don't mind, I'd like to start with tax receipts, because just about a month ago, the administration told Congress that tax receipts this year are running a little behind what had been expected, meaning that we could run out of money sooner than expected. Obviously, the debt ceiling and a lot of other things come to that conclusion. But can you give us an update right now on where the U.S. tax receipts stand?
Sure, they're a little bit lower than we expected, which is not unnatural, especially in anticipation of tax reform. There's certain individuals and businesses that are pushing off taxes to later in the year, but nothing that we're all concerned about.
That's what I wanted to get at, because we have had CEOs who have told us here on the set that they are holding off on spending plans because they're waiting to see what happens with tax reform. They'd rather know what they're getting into before they actually do that. Is that what you think is happening, kind of a hold off as people wait to see what happens with tax reform?
I think it's less of a management on holding off on investments, and it's a little bit more of some companies do have flexibility in how they manage taxes within the year.
Where do we stand on the tax reform process? And should we be calling this tax reform at this point or tax cuts? Because we've gotten mixed messages from some congressional leaders that we've spoken to here.
I think it's both. It's massive tax reform that comes along with tax cuts. And this is my number one focus. It's critical to economic growth. As I've talked about continuously, our economic plan is a combination of tax reform, regulatory relief, and trade. Last week, we were pleased to deliver our report on regulatory reform, and we're moving forward very quickly on tax reform and expect to get it done this year.
I guess I asked for the semantics on that just because we've been hearing more and more frequently, including from Senator Perdue, who was on the set with us yesterday, that when it comes to a border adjustment tax, that's dead on arrival when it gets to the Senate, that they would rather just see rates taken down across the board, lower rates, and that's really the focus that they think that they can get past, at least in the first go-around.
Well, the focus is lower rates, but I would say it comes with that is reform, which is broadening the base, making sure that we take out lots of special interest deductions, and simplifying the tax code. And I'd say on the business side, the biggest change we've talked about is the need to move to a territorial system. It makes no sense. We have one of the highest tax rates. We tax on worldwide income. We have a concept of deferral. We want to make sure that companies bring back that money onshore to reinvest in American equipment and American jobs.
Let's go back to tax receipts for a moment. I'm just wondering if you have a date, a rough date, that you think we may run out of money, a time by which you think the debt ceiling needs to be lifted.
Well, we continuously update our estimates, and I've said, I want to make sure for the markets that people understand that we are fine through the beginning of September. Having said that, I've urged Congress to act before they leave. I think it's critical that we send a message to the world that the U.S. debt is the most important part of our credit and that we're focused on it, and I'd encourage them to act quickly, but if they don't, we have plans to fund the government, and that shouldn't create concerns through September.
Mick Mulvaney from the administration has advocated actually using that debt limit, that ceiling, as a way to kind of getting more of what they want when it comes to budget constraints, issues along those lines. I thought I heard you say, I realize that your first message is you'd like to see this get passed sooner rather than later, but I thought I heard you say to Congress that there may be times when that debt ceiling could be used. Was I right in hearing that, or is that a different message?
No, it was a different message. The question that I got during my testimony was on a government shutdown, and not to confuse the debt limit with spending. So Congress has the right to control spending. If they need to shut down the government for spending reasons, that's one thing. But the debt limit is about things that we've already spent and we have to pay for.
House Speaker Paul Ryan makes a big speech on taxes today and tax reform. Have you spoken with him about what's in there? Are you privy to that? And he says, in the comments that we've seen, that he wants to get it done this year. Is that still possible, and are you confident that will happen?
Absolutely. The Speaker, myself, the Senate leadership, we are all 100% committed to getting it done this year. It's critical to the economy. We have a unique opportunity to do this. It's been 30 years. We have to fix the system. And our teams are meeting daily. We are meeting weekly. And we couldn't be more focused on getting this done.
Have you consulted with him about that speech, or has he talked to you about what he's going to put in that speech? And we notice in the parts that we've seen that there's no reference to a border adjustment tax. Is that because of you?
Again, we've been meeting weekly. We speak constantly. We fundamentally agree on what the principles are, and we're working hard to get the details ironed out.
Mr. Secretary, I wanted to ask about the time frame for regulatory relief following your white paper that you've already mentioned released last week. I understand, of course, that lots of that, perhaps even a majority of that, can be done through regulation without the need to pass laws through Congress. However, that does rely on many appointments and posts still being made, posts being filled, which hasn't been done yet. So what is the time frame for some of that deregulation you outlined last week?
Well, let me first just comment on the post, because I clearly hear about this, and I just want to completely dispel the myth here. So there's basically 26 positions in Treasury that we need to fill. I think we've announced 16 of those positions. We have another 5 of those positions that are going through FBI background checks that need to be cleared and will then be released. And there's 3 or 4 positions that, quite frankly, we don't think we need to fill that are overlap in government and just unnecessary, and we don't. So we have virtually the entire team either picked or already in the process. And I've said before, we have an unbelievable career staff at Treasury. So we have no shortage of resources, both within the political appointments as well as in the career staff.
There's also 19 of 22 key regulatory leadership positions turning over the next 6 months, according to analysis by Goldman Sachs. Have you got people ready to fill those posts? And I come back to the first point of the question, when can some of this deregulation actually be carried out?
Again, let me just first comment on we're very focused on those posts. Again, we've announced some of them. We have a lot of people already in the process there. And even without filling those posts, we're already working on regulatory reform. So before the report came out, I've been working at the FSOC with the other regulators. We have a lot of things that we're working on in the process. One of them, as I've talked about before, is trying to fix the Volcker rule. There's a lot of consistency, and that needs to be done. And we're busy working on this regulatory relief every day. We're also working with the House and the Senate on trying to understand what the priorities are for legislative changes. And we expect to see the Senate now move forward with legislative changes as well.
And Mr. Secretary, with regards to the measures outlined in the white paper, what do you say to people who criticize it for saying that it will benefit banks' shareholders more than the economy?
Again, we have a lot of people who have been focused on this. We've reached out to literally hundreds of people, not just bankers, community groups, think tanks, regulators. We're focused on unlocking the regulatory system. We believe in proper regulation. We're going to make sure that banks are not too big to fail, that they're properly supervised. But we're fixing issues to literally unlock billions, if not trillions, in new liquidity to make small and medium-sized business loans in this country.
Mr. Secretary, President Trump criticized Amazon and Jeff Bezos while he was on the campaign trail. Now with this news that Amazon wants to buy Whole Foods, there's been cries from the left primarily that Amazon is too powerful and too big a business. Can you see any reason why this administration would want to step into that deal?
Well, again, it's not for us to comment on the deal one way or another, but I will comment that Jeff Bezos was at the Tech Council yesterday. We appreciate his involvement. He has a lot of really good ideas for the administration. And, we had an amazing day yesterday with tech leaders showing us and helping us how we can move government into the next century, whether it's cybersecurity, whether it's updating our aged infrastructure. We've underinvested in technology for too long. We have too much duplication. There's a lot of money we can save for taxpayers.
Secretary Mnuchin, when I spoke with you a few months ago, you had brought up this idea again that you were considering pretty closely, the idea of trying to come up with 50-year or even 100-year Treasury bonds, that would be something that would be a great way for the government to lock in low interest rates while they're here. In the last 18 months, we've seen 4 increases at the Fed. That's about 100 basis points over the last 18 months, which adds up to about an extra $200 billion that we are spending to just pay off the interest on our debt. Have we gotten any closer on potentially coming to reality with either a 50-year or 100-year bond?
Yeah, we're studying it. We've been working with the Treasury Borrowing Committee. We're taking input for investors, and it's something we have very seriously under consideration.
Mr. Secretary, we heard last week from Chair Yellen about potential shrinkage of the Fed's balance sheet going forward. What's your view on the likely effect of when that starts to happen? I mean, including on issues like loan growth. Will it suppress that because liquidity will be removed from the system and borrowing costs are likely to rise?
Well, let me just comment that that's obviously a Fed decision and something that they do independently of us. I have had conversations with the chair on what they're trying to do, and we understand that, and we think it's the right thing for them to get out of their large portfolio. It was something that they did in a unique period of time, and obviously it has to be reversed.
Secretary Mnuchin, we want to thank you very much for your time today. We do appreciate seeing you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.